In this exploration, we tackle the critical question, will Ethereum recover? We'll look at Ethereum's future and analyze ETH's present market status, potential for resurgence, the anticipated impact on the progress on Ethereum 2.0, and share expert price predictions. And will Ethereum recover often becomes so many things in this case. Among them, November is possible for rebounding. According to the Ethereum department, continue to show the action of using the infection of Institute to proof of stake and the introduction of EIP, Ethereum Improvement Proposal 1559, launched all the way back in August 2021, which brings deflationary pressure on Ethereum's intense supply, making it a more attractive investment. Additionally, Layer 2 technologies are enhancing Ethereum's scalability, addressing previous challenges of high transaction fees and slow speeds. Ethereum's dominance in the smart contract sector and its substantial role in the decentralized finance ecosystem further strengthen its recovery prospects. However, predicting the exact trajectory of Ethereum's recovery remains complex, with varying forecasts suggesting both potential ups and many downs in the near future. These 10 factors could be crucial for answering the question, will Ethereum recover?
Does in non-important our
Ethereum's development roadmap includes significant upgrades like Proto Danksharding, also known as EIP 4844, and full Danksharding, which could greatly impact its scalability and functionality. The successful implementation of these upgrades, you can boost confidence in the network and the Ethereum's future price. And regulatory decisions such as the approval of a spot Ethereum exchange traded fund in the United States by the Securities and Exchange Commission can have a substantial impact on Ethereum's status as a digital asset. BlackRock filed for a spot ETH ETF in mid-November 2023. Ethereum's performance is closely tied to the broader cryptocurrency market. The general uptrend in the crypto market, catalyzed by events like the Bitcoin halving, can positively influence Ethereum's price. Or the Ethereum's transition to a proof-of-stake POS consensus mechanism includes a mechanism called EIP 1559, which introduces a fee-burning mechanism. The more ETH is burned in transactions, the scarcer it becomes, potentially increasing its value. And the adoption and success of Ethereum Layer 2 scaling solutions, such as optimistic rollups and ZK rollups, can significantly improve the network scalability and reduce transaction fees. This could attract more users and developers. Ethereum's ecosystem heavily relies on DeFi and NFT applications. Increased adoption and activity in these sectors can drive demand for ETH and positively impact its now lost for Ethereum faces competition from other blockchain platforms like Solana and Cardano. The success or failure of these competitors can affect Ethereum's market position, and economic events such as inflation, monetary policy decisions, and global financial crises can influence investors' choices. Cryptocurrencies like Ethereum are sometimes seen as a hedge against traditional financial instability. The security of the Ethereum network is crucial. High-profile hacks or vulnerabilities can undermine trust in the platform and lead to price declines. The growth of the Ethereum ecosystem, including the number of dApps, users, and developers, can affect its adoption and value. Ethereum's burn rate is a key aspect of its economics, influencing both its supply dynamics and long-term valuation. To grasp the Ethereum burn introduced with the IP 1559, examining the later data and understanding how this mechanism operates within the Ethereum ecosystem is crucial. And this is a proposal that fundamentally restructured Ethereum's fee market. Before this proposal, miners receive the entire transaction fee. And this is essential at 4. Now, miners remove the vehicle fee for transactions, which is burned, permanently removed from circulation, and only an optional tip is given to miners. This mechanism aims to make transaction fees more predictable and network more efficient. And the ultrasound money meme emerged from the community in response to EIP 1559. It plays on the concept of sound money, a term traditionally used to describe money that is not prone to depreciation and is a reliable store of value, like gold. And with EIP 1559, Ethereum's supply becomes more predictable and potentially deflationary. If the amount of ETH burned exceeds the new ETH issued, the total supply will decrease over time, hence the term ultra-sound money. This is seen as an enhancement over sound money, with Ethereum not just maintaining the value, but potentially increasing it due to the decreasing supply. The attached chart underscores the impact of these changes on Ethereum supply, especially post-EIP 1559, where the supply curve starts to flatten, suggesting a reduction in the growth of Ethereum's million total supply. This aligns with the concept of Ethereum becoming a deflationary asset post-EIP 1559, contributing to the narrative that Ethereum's future could be as an ultra-sound form of money. On November 17, 2023, the Ethereum supply stood at 88 million ETH in accounts, 3.7 million ETH in contracts, and 28.5 million ETH in validators, totaling 120.3 million ETH. The dotted line indicates Ethereum's future decrease in total supply due to the burning of ETH and the issuance changes post-merge. The chart projects that the ETH supply will shrink to 117.7 million ETH in November 2025. And the realm of cryptocurrency, technical analysis serves as a navigational tool to gauge market sentiment and potential price movements. Examining the one-week ETH USD chart provides insight into Ethereum's compromise action and helps address the burning question, will Ethereum recover? The chart showcases several Fibonacci retracement levels, which are crucial in identifying potential support and resistance zones based on previous price movements. Here are the key Fibonacci retracement levels and highlighted. 0.236 at $1,847. This level acts as a potential support zone. $0.382 and $441 is the next key fib level, displaying the next resistance. 0.5, the $2,922 level, represents a psychological midpoint. On 0.618, it's at $34.02. This level is often considered the golden ratio, a significant reversal point. 0.786, $4,085 is a deeper retracement level that can signal strength in the prevailing trend. The full retracement level at 4,956 marks a complete return to all-time high. 1.618 at $7K, $471. This extended fib level could be the first long-term bullish target. 2.618 to 11.54 represents an optimistic projection in a strong Ethereum bull run. Number 3.618, this level at $15,609 would be an extraordinary target for a sustained bull run. And 4.236, the 18,123 fib level is the highest projected target on the chart, indicating an extreme bull case scenario. The chart shows a black ascending trend line tracing the lows and signifying a potential area of support that Ethereum's price could respect. If the price maintains above this line, it may indicate continued bullish sentiment. The red box or resistance zone around the year-to-date high at 2,137 underscores a region where sellers have previously entered the market. Overcoming the zone is critical for Ethereum to continue its upward trajectory. The relative strength index, sitting at 4807, shows Ethereum is neither in the overbought nor oversold territory. This indicates a neutral momentum, which could precede a move in either direction. While the chart presents strong arguments for an Ethereum bull run, with ETH price sustaining above critical support levels and challenging notable resistance zones, the future price action will depend on how the market interacts with these technical indicators. If Ethereum can break through the resistance encapsulated by the YTD high, we could see an affirmative answer to manage their own partners. Now, will Ethereum recover? However, it is imperative for investors to monitor these levels closely as they serve as a roadmap, not a crystal ball. The new BTC, Tony the Bull Severino, News BTC's head of research, has provided an in-depth analysis of Ethereum's market behavior in his latest edition of CoinChartist. He observes Ethereum has yet to begin trending with a reading above 20 on the ADX, nor has it broken above the upper Bollinger Band. But these signals are likely coming soon, this suggesting Ethereum's significant uptrend might be on the horizon. And comparing Ethereum with Bitcoin, Severino notes at this D is much lower within the Ichimoku cloud than Bitcoin, indicating Ethereum is currently lagging behind Bitcoin. However, he anticipates Ethereum will soon switch to overperformance. Highlighting a positive development, Severino states, ETHUSD1W was finally able to crack above its TDST downtrend resistance. Yet Ethereum needs to form a perfected TD9 series for further bullish confirmation. On the monthly chart, Ethereum's overbought status on the stochastic indicator suggests a strong trend. As Severino points out, each time the stochastic has confirmed a 1 million above 80 on the stock, there was a massive push higher. Looking ahead, Severino underscores the importance of Ethereum's performance against Bitcoin. But if ETH-BTC can push back above 20, this will generate a buy signal on the 1 million stochastic work and kickstart Ether's overperformance above Bitcoin. His analysis provides a detailed perspective on Ethereum's potential future trajectory in the crypto market. The continuous evolution of Ethereum through its 2.0 upgrade sets the stage for an optimistic price prediction. As the network becomes more scalable, secure, and sustainable, the intrinsic value of Ethereum is likely to increase. The successful completion of the Shanghai Capella upgrade, which introduced staking, is already a significant milestone that demonstrates the network's commitment to its roadmap. Such advancements are expected to reinforce investor confidence and could catalyze a bullish outlook for Ethereum's future price. Ethereum 2.0 represents a series of upgrades aimed at improving the network's scalability, security, and sustainability. Contrary to the previous term ETH2, the roadmap is now defined by more specific upgrade milestones. And make sure that they're giving us especially no proof of commons that can be carried by a complex document. And I had one more documents that they invested on comments that they know itself the need for energy intensive. Another key feature, staking withdrawals has already been enabled with the Shanghai Capella upgrade, which went live on April 12th, 2023. The surge. The next phase involves scalability improvements through rollups and data sharding. Dank sharding, a key component, aims to make layer 2 rollups cheaper by incorporating blobs of data into Ethereum blocks. And the Scourge, this phase focuses on ensuring censorship resistance, decentralization, and addressing protocol risks, such as those arising from minor extractable value. The Verge, it is designed to make verifying blocks easier. And the Purge, this stage aims to reduce computational costs. They simplify the protocol and making running nodes more efficient. And not today. That's right, and understanding that I asked a few more seconds in. That's a big deal. The Splurge. This includes miscellaneous upgrades that do not fit into the other categories. And the Ethereum community has replaced the term Ethereum 2.0 with more specific names for each upgrade, providing clearer insight into the network's transition and improvements. These upgrades aim to turn Ethereum into a fully scaled, resilient platform capable of supporting a global decentralized application system. As implementation of these phases progresses, Ethereum's growing appeal as an investment could positively influence its price predictions. An EIP 4844 introduces shard blob transactions to enhance Ethereum's data availability in a way that aligns with future full sharding plans. This proposal creates a new specimen containing blobs, large data segments essential for rollups, a layer 2 solution but inaccessible for EVM execution. It serves as a temporary scaling solution, bridging the gap until full sharding implementation. Notably, rollups have become increasingly important for scaling Ethereum as they offer a way to execute transactions outside the main Ethereum chain, layer 1, and then post the data back to layer 1. EIP 4844's 4S format is expected to greatly reduce transaction fees for rollups by offering a cheaper data storage mechanism compared to current methods. Full dank sharding, which advances from proto-dank sharding, will likely further reduce costs for layer 2 rollups. It introduces blobs in a format slated for use in the final sharding design. This includes a new transaction type and an independent fee market for these blobs. Full dank sharding will build on proto-dank sharding and aims to further cut layer 2 rollups' costs. It will comprehensively implement data availability sampling and essential components for a fully sharded Ethereum network, including proposer-builder separation and proof of custody. This approach aims to assign only a portion of the data to validators, reducing the network's load and enhancing scalability. As Ethereum continues to progress with its 2.0 upgrades, the financial community has been actively speculating on its future value. Here are some Ethereum price predictions from renowned institutions and analysts, answering the question, will Ethereum recover? The investment management firm predicts that Ethereum's price could reach as high as 11.8K by 2030. This projection is based on their assessment that Ethereum's network revenues could rise from $2.6 billion to $51 billion in 2030, assuming Ethereum captures a 70% market share among smart contract platforms, as that actually seems to be satisfied in North Carolina, as they may have additional digital message. Where you will, they have a document converting for the attorney engine to $8,000 by the end of 2026. Their Ethereum bull run prediction is based on Ethereum's established dominance in smart contract platforms and the potential for emerging uses, areas like gaming and tokenization. Moreover, they suggest that the upcoming Bitcoin halving in April 2024 could positively impact the broader crypto market, especially Ethereum. And also the potential approval of a spot Ethereum ETF in the US could significantly impact Ethereum's price. BlackRock, the world's largest asset manager, filed for a spot Ethereum ETF in mid-November 2023. The approval of this ETF would mark a major milestone for Ethereum, potentially attracting more institutional and retail investments and substantially boosting Ethereum's market price. Ethereum's recovery depends on various factors, including market trends, technological advancements, and broader economic conditions. With ongoing upgrades like Ethereum 2.0, many analysts remain optimistic about its long-term potential. Many market experts predict Ethereum will go back up. They're citing improvements from Ethereum 2.0 and increasing adoption in DeFi, NFTs, and traditional finance. Ethereum is transitioning to a more scalable, secure, and sustainable network with Ethereum 2.0. This is potentially leading to increased adoption and value. The Ethereum burn, introduced in EIP 1559, permanently destroys a part of transaction fees, potentially creating deflationary pressure on Ethereum's supply. The current market predictions and the development roadmap suggest potential for Ethereum's price to increase. But the exact trajectory will depend on multiple factors. As of the latest available data, the Ethereum network has burned 0.2 million ETH tokens since implementing EIP 1559. The burn rate dynamically adjusts based on network activity. The start of the bull run for Ethereum is speculative. It depends on market cycles, investor sentiment, and significant catalysts like upgrades and regulatory developments. Market volatility is inherent to cryptocurrencies. While Ethereum may experience downturns, its fundamental development aims to mitigate such risks and foster growth. Various predictions exist, ranging from moderate increases to high valuations by 2030. Standard Chartered predicts $8,000 per ETH by the end of 2026. The general consensus among many analysts is positive. The value of Ethereum is expected to rise as it develops and becomes more widespread in the blockchain sector.